Chris Parks here with McLean Mortgage to give you guys a really cool update. Well, kind of great information on what is going on with the whole forbearance issue. Just want to make sure that you know what forbearance is. Forbearance on your mortgage, that is. Also other credit items, but mainly applying to your mortgage. First thing you need to know about forbearance is historically speaking, it came out just recently with the most recent relief package that the Senate came forward with to try to help consumers make sure that they could stay in their homes during this pandemic that we're experiencing. And so it was a great concept to help people who were likely going to be in trouble to make sure that they weren't losing their home because they currently were not able to be employed because everybody with the stay-at-home orders. So it was a great thought and a great concept, but some of it became kind of a half-baked idea because it didn't quite get all the information necessary to make this thing extremely good. What they ended up doing with this is in Congress is they ended up making the relief package for the consumer, but the problem is that the bank still has to make their payments. They still have to pay the Fed and also the Treasury the money that they're borrowing. And they also have to pay for homeowners insurance and taxes to make sure that you don't go delinquent on those. And so the truth is it kind of was a half-baked idea because they gave the consumer relief, which was very necessary. The consumer did need that relief, but it was half-baked from the standpoint that they didn't give everybody the same kind of relief. And so now that they've started hashing out what forbearance means, you need to make sure that you kind of know where this is coming from. And so it was designed for those who are experiencing hardship caused by the COVID-19 and need to request forbearance. And it's good. It's not going to affect your credit if you take advantage of it, but it is going to affect your ability to qualify. Because if you go into this forbearance, you're going to have to get out of it before you're able to reestablish credit, in essence, before you're going to be able to take on credit worthy. I mean, kind of think about it. If you're in the situation where you can't make your payments and so you have to go into forbearance, why would somebody want to lend you money to refinance or buy a new home? You kind of have to think about it. So those are some things that kind of need to be thought through. So first of all, if you request it, it is not forgiveness. You're not getting payment forgiveness on your forbearance. That's a total misnomer. It's a total fallacy. You just need to understand that you do have to repay it. There's just a variety of ways that you can take advantage of in order to pay this. And the way to take advantage of this would be you have several options under forbearance to be able to temporarily reduce or suspend your mortgage payments. Now, once you're done with this, you do have to repay it at some point. So you've got a couple of different options. Fannie Mae has provided 4 different options to help you in this repayment program. The first one is you can write a big check for the full repayment of everything that you have that you put into forbearance. That's a fair amount of money. If you skip 3 months of payments, that could be, if you're paying $1,000 a month, that's $3,000 that you have to make on top of your regular payment. So you kind of have to decide whether that's a really good way to go. And most of the people I can say is probably not going to make that work. The second one is that you have a short-term repayment plan. And that means that you can, over the next 12 months, you can gradually work with your lender to repay whatever it was of that mortgage that you put into deferral. And all that stuff does work too. There's a lot of places that you can make that happen. In some cases, the lender may be willing to allow you to put that information or that balance due at the end of the loan. But here's the downside to that piece is now you're adding interest on something, and it's not just extending your payments, you're extending interest too. So there's more to it than just extending that. So you kind of have to think through it. The last one of the 4 is you could do what's called a loan modification. Now, you kind of have to think through that one because in a loan modification, what they're going to do is try to help you, at least for the short term, afford your payments. And that's what the loan modification does, is let's say you're paying $1,000 because of your new income and where it's at, you can't pay $1,000. Instead, you need to pay $750. Well, they're going to structure that loan so that over the next period of time, let's say 4 to 5 years, you can make that $750 payment, but after that, it's going to incrementally go back up to what it was. And you're going to be adding interest towards the end. So it's a great way to make sure that you keep the house, but it's not always necessarily the best way to do it. The best thing is if you don't have to go into forbearance, the best thing is to just simply not do it. Okay. Now, having said that, if you're trying to qualify now that you've been into forbearance and you're like, I thought I needed it, but I really don't need it. And so now I'm trying to get out of it. So here's what you have to do. You have to fully catch up. You have to fully pay it off. And you have to fully show that you don't have anything in forbearance currently. So this was something that the lenders came out with in June, early June, as a guidelines for us to use. And so here's what they kind of want to see is you need to review the credit report. We need to, as lenders, we have to review the credit report, and we have to determine if you have something that's in forbearance. So if we see a zero payment on something, that means it's in forbearance, and you have a balance and a zero payment, you're in forbearance. And we're going to have to figure out what that means. How long have you been in forbearance? Are you going to be adding money to the end? Are you going to be, what are the aspects of this? If you're dealing with a car, if you're dealing with a house, because I have had people come to me and say, I want to refinance, rates are awesome, let's do it. Well, that's awesome, but you're in forbearance. So now we got to get you out of forbearance. We got to get you caught up, okay? So then we would need a payoff statement showing that you haven't missed any payments or that you're current with those payments, okay? And so on and so forth. Now, does it mean that if you are in forbearance and you're in one of those repayment plans like we kind of talked about earlier, does that mean you can't refinance or purchase? No, not necessarily. But now what it means is you have to have a certain amount of payments behind you in that program, and you've satisfied that program in order to move forward. And the underwriter is going to look at you really closely to make sure that you truly can afford these payments. Now, typically they're going to want 3 payments. That's what Fannie Mae requirement is. Some banks may require more, but Fannie Mae's minimum requirement is 3 payments to make sure that you've made those timely payments and that we can verify that those timely payments have been made in order for us to go ahead and issue another mortgage. You have to fully reinstate the loan. So the loan has to be reinstated back into normal operation, and you have to be the one making those payments, okay? Now, it's not impossible to do that. I have heard of some situations where lenders are putting people into forbearance and they don't even know, the consumer doesn't even know that they're in forbearance. That is a possibility as well, in which case you still have to go through this. I would highly encourage you to challenge the lender and to talk to them directly about how to get that off, okay? Now, if you've missed some payments during this reinstatement process, it doesn't necessarily affect your credit report, because that's what this whole forbearance thing was designed to do by Congress, was to help you, get back on your feet and have solid ground, so that it wasn't like 2009 where 10% of America lost their home. They didn't want that. Nobody wants your home. They want you to keep it. Now, having said that, you're going to have to make sure that we have reinstated and that now that you're current with it in order for us to be able to move forward and help you with the other one. If you were in payment deferral, that you've made 3 consecutive payments and that the effective date of those payments are based on the agreement. If you've done a modification, that you've gone through that trial modification period and that you've made 3 successful payments of that as well. Any other loss mitigations, you must have completely satisfied whatever that program is, or made 3 consecutive full payments in accordance with that program. So it's not extremely easy to get to mess up, but at the same point in time, it's not too terribly simple either. So keep in mind that if you have gone into forbearance, that you need to try to catch this up. Anyway, this is Chris Parks and McLean Mortgage. Just want to make sure you have some great information on how forbearance works and how it could affect you as you're trying to qualify for the next home. Thanks so much for your time.